Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Chris Long. He's the founder of Longyards, an industrial real estate investment company that acquires and develops adaptable and affordable industrial storage solutions tailored for contractors, small businesses, and large-scale operations. They currently have 10 locations throughout North America, and Chris himself has been involved in the construction industry since he was 14 years old. So Chris, thank you so much for being on the show today.
Excited to be here. Thanks, Charles.
So you've been in the industry in sales and in construction for many years. Can you kind of give us a little background on yourself prior to getting involved in launching Longyards, what you're doing?
Yeah, I was a contractor, a licensed carpenter in construction, and literally swinging a hammer and, got into real estate. And also at the same time, when I was 14, I was knocking on doors, selling chocolate bars. So it was always, physically working.
What? I'm sorry.
Selling chocolate bars.
Oh, chocolate bars.
Yeah. So, it just came natural for me to knock on doors and a builder. So, and I just love innovation. So yeah, a little bit of my history. I was a builder and a few worlds collided, my love for real estate and love for building with Longyards, and this is where we are.
So tell me about getting into real estate, because there's a lot of contractors, just like there's a lot of agents that haven't gone to the dark side of investing, and they're staying on kind of their transactional approach. What made you go over into investing, and kind of, what was your first project within that?
Yeah, so it's the weirdest thing. Even as a kid, I knew... I don't know if it was Rich Dad Poor Dad or what originally triggered my thought process to get into the passive income world. But real estate, I just knew it was a wealth builder. I love the idea of owning and controlling assets. So it was always there. And then the first one, it worked great. I bought my first house, and as a carpenter, I bootstrapped it, turned it into a duplex. Then every single month, cash at the door, paying my mortgage. So the basement tenant was paying my upstairs mortgage. And I always had the vision as a young age, and it was, when it comes to fruition, it just feels that much better. So, that's how it started, and you could just never go backwards when you taste that money, and that freedom that comes with it. It's a lot of hard work to get to the other side, but the grass is greener on that side.
Yeah. It took me a couple deals to actually find a deal that actually worked how it was supposed to, and when you hit that, you're like, oh, this is now I figured it out. This is the whole thing. This is how it's supposed to work. This is how people actually make this a real business, by just doing what I just did, not what I was doing before. So that's a great feeling.
Yeah, you got it.
So give us an overview kind of what your company Longyards does, and really what the concept behind your business is.
So what Longyards does is basically we provide storage yards. So any listener out there, there's mini storage or a contractor. There's your traditional self-storage. And then there's storage yards. We are the same thing, except when you go to a unit, instead of rolling up a door with roofs and a wall, you open up your gate and you got a yard. So in Ottawa, it's quite literally a Longyard. It's 200 feet by 2,000 feet. And with this road in the middle, and on both sides, we have small, medium, large yards. So that's Longyards in a nutshell. It's contractor storage yards. It's a lot different. And we're filling a niche that doesn't exist. And in the iOS space, there's a lot of people going after bigger yards, chasing larger clients. And there's a massive blue sea, of small and medium-sized businesses that need small, medium-sized yards. And that's the problem we're solving.
Yeah. When I talk to brokers in commercial real estate, they're they have backlogs of people looking for any type of unique, smaller industrial spaces. So it's definitely a market gap. But I'm interested in finding out kind of how you identified that market gap in affordable storage early on, because obviously if you're a broker and you see people keep on asking you for something, you're like, oh, maybe I should start trying to find these assets to offer to these people that are asking for it. But from where you were as a contractor and just getting started in real estate, what kind of, how did you find that?
Well, it's a really funny full cycle world, because what happened when I was about to be a contractor at the beginning, I was actually thinking about becoming a broker. And I interviewed some of the top brokers and I sat down with them and I'm like, what's that world like? And then I quickly realized it's just not for me, because I'm more of a builder and innovator, and I love to see my thoughts come to creation. So kind of circling back when I became a carpenter, how I found the problem is because I lived with the problem. So, I just has had enough balls to figure out a solution. So I had to put I had to put it on the table. I had to sell my house and make this work, because no investor would get behind me. No banks would get behind me. No lender, nobody. They're all like, you're crazy. And I'm a simple guy. I'm like, you know what? If I need the space, other people need the space. And that's the thought process. And that's still, and it became true. I started with my first location. I started small, and then quickly leased up, And then now that thing has created financial freedom. Not only that, it's created a blueprint to do that again and again internationally, which is what we're working on. So yeah, that's how it started. It started with me having the need and knowing enough to solve that problem myself.
So let's just branch out a little bit of what you just talked about on capitalizing your first properties there. I mean, how do you today finance your properties? Because this is a niche thing. So when I hear that, it's something where I think you're going to, local credit unions, local banks. Is there a mix of bank and SBA loans involved with how you guys work?
Right. So we became a franchisor, and now we are doing a partnership model. So we actually partner with people. But what's unique is, the SBA actually approved us. We're on the directory list. So we launched our location. We built the FDD. We went on the SBA directory list. If you look at Longhorn Steakhouse, we're right underneath them, Longyards, and that's how we're doing it. So because the banks, the local credit unions, their heads just explode when we try talking to them about what we're doing. So we figured after 5, maybe 15 locations, we'll then go, wrap them in a baby's blanket and explain it to them with a little bottle of milk. But for now, we're not doing that. We're going to SBA. And we also have, some investors coming in with just liquidity. So we have to get really creative on our financing strategy. But, as long as people are willing to play with SBA, which is great. We just bought a piece of industrial land, including all of our build out and operating costs for 10% down, right? Like you can't really do that. And we could buy raw land for 10% down while doing the Longyards build out. So it's a land banking and a cash flow play. But most importantly for SBA, they love small business. That's what we do. These yards support small business. It's month to month. It's like self-storage with iOS. So that's what's really cool about it. And that right now, that's our lending strategy.
Can you explain what iOS stands for?
Yeah, it's kind of a new term, industrial outside storage.
Yeah. One of the things that you're talking about there with the SBA, you probably have listeners that are with us right now that don't know kind of what the SBA does and what it's for. Now, you're not just a real estate, as you were just saying, it's a business and real estate put together. So can you explain a little bit about what SBA is used for and how would one go about, getting approved for one, what projects they like to see within this realm?
That's a good question. So what SBA stands for is Small Business Administration. And I'm Canadian. So in Canada, we have what's BDC, Business Development Canada. But basically, they're government-backed programs that help people launch a business. And what's unique about us is that, we're a business with real estate. So we have both. And what people sometimes forget is if you're buying a multifamily, it's still a business on top of real estate. It's just more brick and mortar and fixed. But if you take apart the two components, there is a business and there's a dirt underneath it. We just happen to marry both of them. And so what that means is we could buy dirt and SBA will fund your entire build out. So this means your carrying costs. How much does it cost to make it profitable? Any fees associated, soft costs, legal costs, everything associated with the project that makes sense that could be covered within reason of the project, including construction, even giving you a fee. If you got to take time off your job and you give yourself, $40,000 during the 6 month of your build out, SBA will put that in there. So simple numbers, let's say it's a $500,000 project all in, which by the way, we do leases. So we don't have to buy dirt to solve our problem. We can lease on a piece of land, do our build out, which in that example, $500,000 is a very reasonable approach. What do you need to come up with? 10%, $50,000. And on a project that we're doing right now, an exact scenario for that, we're cash flowing over $12,000 net profit a month on a $50,000 investment using our Longyards model. So it allows people to get into the game of business while, usually not having to come up with a crazy amount of money.
So a lot of questions there. Number one is that with land leasing, how long are those leases for? And that's how you're able to get such a high percentage of financing by SBA because you're not buying the property, correct?
Well, both. We just bought it using $3 million and we're doing a lease for $500,000. So you do need a minimum of 10 years. SBA wants to see 10 years. The loan is 10 years because it's more equipment financing on that side of things. And ideally, we try to get as long as we can with our lease build outs, but with a lease, it's minimum 10 years.
Okay. That's all it is. What kind of caveats in there are there for renewing that, or how does that work going forward?
It's all negotiated. I mean, we're not going to look at anything for 10 years or less than 10 years. So as long as, now the other thing with SBA is they don't want to do site plan improvement. So the land has to be ready. This means gravel. We have a tier program with our underwriting tools. We've literally built all the IP. And by the way, for anyone, it's like we are full turnkey. We find the land, we do the underwriting, we give you an executive summary for the bank, we do the construction, we can help with the management, lease up, marketing, everything. We're turnkey. So we know exactly what the banks want, SBA, because we've gone through it. This is our bread and butter. But for the SBA, they want a land that's ready, 10 years. And as long as the debt service coverage ratio works and the cash flow, then they'll lend it.
Nice. And what type of collateral? I had a friend that went through before, many years back with SBA, but what kind of collateral are they, if any, are they requesting for you?
Right. So there's kind of like breaking points. So if you're below $500,000, in some cases, they don't ask to cross collateralize. Now, there's two layers to that. There's the SBA requirement, and then there's the bank or the program that kind of, works with SBA. And sometimes they might want you to cross collateralize. So that really depends. So, but if you're trying to buy dirt and you're going 90-10 loan to value, in most cases, they're going to want to see, obviously, the check boxes like good credit, liquidity, ideally business experience, or you partner with us. And then they want to see assets that they can collateralize on to then, cover themselves in the worst case hedge situation.
Yeah. It's pretty much the more times your system is duplicated, the less risky it becomes, I would imagine. And that just makes it easier for people down the road.
Exactly. Yeah.
So let's talk about this kind of, you talked a little bit about this plan that you have that you've been duplicating 10 times. How do you measure the potential demand for a project before investing? Because this seems, if you can easily, if I'm looking to build an apartment complex, something like this, I can really hone in and see exactly what similar properties are renting for. If I was going to open a self-storage complex, I can easily find out what neighboring complexes have, how far they are, all that kind of stuff. For you, since it's such a unique business model, how are you actually finding out the demand when you're choosing sites for new facilities?
Yeah, that's a great question. So this has gone to a lot of research and development. There's kind of like two worlds we live in. There's one where you can go deep into the weeds, and we've built a whole TAM and a whole funnel. It goes TAM, local zoning, local building requirements, buy box, feasibility, and then that's the property, right? And the TAM is weighted distribution metrics of the income we project versus the cost we project and where's the best dollars spent, because we're international, so corporately we can laser focus on where we think the most data is. And then there's the other world where you throw spaghetti against the wall and see if it sticks, right? Because what the market does is it challenges all your assumptions, right? And we're new. So, if I had 50 locations, I can come to you with more data and be like, okay, this is exactly how much we're going to get, but we don't. So we can go based on the assumptions data that we have internally built, which is internal to our IP, which we do feel confident, and we're validating all those assumptions accurately. But those are comps data reference marks that we've built internally that gives us the information to now look at a property, because you got to go, how much can I pay for this? Well, you only know how much you pay versus how much you can get. So we've built our feasibility tools to give you those numbers. But it's not an easy process, and it's taken us a long time to get that dialed in. So, yeah. And
when you're saying the TAM, just so people know, that's a total addressable market. So just so you know kind of what your potential people would be.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners, and since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
How is property management and staffing handled at your facilities? Because this is also another thing where you can't just hire a typical management company. You might not have that many people there, so it makes it a little difficult, and your properties are very spread out all over, from Canada all the way, all the way down south in the United States. So it's spread pretty far.
Yeah. Management is, it took us a while to really craft it. There was assumptions behind it. Like everyone has assumptions. And then I had to fly away from my property. So when I left Canada, I couldn't go back because of immigration, right? You do an L1 immigration. For those that don't know, it's like you can't leave the US. So, when Anthony Robbins says burn the boats to get to the island, I quite literally did that. And then I had to solve my management problem when I could not go back to my facility. That was my first location. So it was a guinea pig for a lot of reasons. And it took about, I would say, almost a year and a half to 2 years to get management really dialed in. And I was going through a lot of people, going through a lot of systems. We revised our lease 14 times. It's not a simple answer, and it's not a simple process. We're dealing with different clients, different avatars, and it's a whole different business. And, we being different masterminds, we could take some of the pieces of other management systems, but this is a whole new wheel that we've had to build. And for that reason, it's complex, but we made it simple, but it took a while to make it simple.
Typically, how many people are working at one of these facilities? Are there full-time people? How many, part-time people?
It's one part-time, but we definitely rely on a lot of technology. But if you have a good size with low maintenance, depending on other structures and whatnot, you could be between 8 and 12 hours a week with one part-time employee.
Okay. All right. What would you consider some of the primary risks and challenges associated with your business and your business model?
I mean, definitely one of the biggest risks is contamination. You got to be very careful with who's on your property and what they're putting on the property. That's a big one. And obviously going into new markets with the data that you have, right? There's assumptions. And then buying dirt, you need to make sure that you're checking all the boxes through due diligence and your easements and everything else. So, on the acquisition side of real estate, there's a lot of risk. You got to be very thorough on the due diligence checklist. It is land, but when people are buying a piece of land and operating a business on it, they need to really there's extra steps that have to be taken. There are still risks, and we're getting better every day to learn and shave those off and trim the fat. But I'd say contamination would be the biggest one that stands out.
Yeah. So you're running a whole bunch of different tests on that, and that's kind of working, and I imagine, to all of your due diligence when you're going into a property.
Yeah, because our first property, we lost 1.5 years because of one due diligence item where there was an easement and the title report messed up the documents on the survey, and we could have sued them, but it was like a business decision. It's like, what do we do? And because of that little trigger, whole site plan approval, curb cut, we had to widen the road going to the property, all these extra things, all because of one little checklist in a due diligence item. And that could have sunk a lot of people. So, every property we learn and we improve our due diligence process. And it's just part of the joining Longyards, right? Like, we've taken the bruises.
Yeah. I get some land investors on the show, and they're telling us about how there's no risk, there's no nothing. And you're like, well, I mean, there's risk with everything. Yeah. So, I mean,
yeah. You got to protect the species of animal on the land. Like, come on. The land has risk. There's always a risk. I don't care how you slice it.
Yeah. And even if there was a building there possibly before and that structure came down, you know what I mean? You could have some sort of environmental problem there that you didn't even know. You know what I mean? Maybe you had an old site that was a gas station or a dry cleaner before. You didn't know about that. And it's not going back against the person that had that 20, 30 years ago. You know what I mean? It's coming up on you. You're now the present owner of the property. So.
Yep, exactly.
So when you guys are running your businesses, different properties, what are some of the key metrics you use to track the success of your property? I imagine it's similar stuff where you're having, like we talked about already, you're talking about occupancy, minimal vacancy, stuff like that. Are there any key metrics that you're really tracking or your team's tracking regularly to grade kind of where you guys are in the project?
Yeah, well, this is a good conversation because we have your key metrics of your facility, and then you got the business of building one location, and you got the key metrics of building the business multiple times. And we integrated EOS, which is having the right people in the right seats. And that goes with KPIs that come with it. At our unit specific location, the KPI is obviously occupancy and also the lease up rate. We want to make sure that our projections that we're leasing up as we project, obviously your carrying costs are huge, and then your market absorption rate. So, we're really tracking this a lot. And then it goes to our avatars in the area. We're assuming that these are the most common avatars. We target them with this much, spending this much on the campaigns. So right from the marketing to the lease up, to the phone calls, to the conversion, these are all metrics that we're tracking. We're always constantly, keeping a mind on it, first of all, but trying to always ask ourselves, how can we improve? Because one of the biggest reasons we want to do is we want to go to markets, pre-lease as quick as we can. We're actually pre-leasing before we even go into markets. So when we actually cut the ribbon, we're already, as pre-lease as we can be.
Let's talk about that. So on the lease up, how are you guys finding, you're finding your tenants? And what are these 1-year leases? How does this typically work in your world?
Yeah, so it's more like shadow marketing. We have to be very strategic with our marketing campaigns. And because I live in that world, I know what these people need to see, where they need to see it, and how they need to see it. And that's our internal process. It's like getting the right writing to the right people with the right message. So, with that, we can test markets and really validate all of our assumptions. And that's a big part of it. So, and sorry, the second question?
I'm just talking about how you lease the property. So how you're actually, because this is a very niche thing. So it's not like going to apartments.com, Zillow, putting up ads. You know what I mean? It's like, there's a lot of people in this in industrial as it is, but this is a very niche part within it. So how are you going out and finding, I guess, landscapers or roll-off dumpster companies or whatever it is that are utilizing your yards?
Yeah, I mean, we just go after them directly. So, it's an education process. No one's searching this and trying to solve the problem. They don't know it exists. So it's an education process. And that takes time and seasoning, and we do that through shadow market.
No, that makes perfect sense, because I imagine once you have 1, 2, 3 complexes, you already know the type of tenants that you do best with, ones that don't fit the model this well, ones that are better capitalized. I have a really good friend of mine that is a contractor in Connecticut, and he does like site prep. And it's one of those things where he'd want to move into another area. He's like, oh, I got to get a yard down there. I got to like do this. I got to make sure it's like close to where it's market, where I'm going. A lot of strategic things that you don't think about when you pick up the phone and you're like, want someone to put an addition onto your garage or something. You know what I mean? So it's like all these different pieces that go together that make it easier for that person to get machinery to your property, to get it back out, and make it cost effective too. They're not like bringing it 4 hours each way to drop something off to do something small at your property. So there's so many different things that I think the regular consumer doesn't see when they're hiring a contractor.
Oh, it's huge. Yeah, absolutely. Yeah, there's a lot. And this is a big problem in the marketplace. And you know that. A lot of people don't know that. Small to medium-sized yards, short and medium term, there's no real solution that is specific to that target audience in the marketplace. And we're working on solving that problem.
So let's talk a little bit about the franchise model. You mentioned it earlier, and this was something that was very interesting to me, and I had to like do a double take when I was researching for this episode, because it's not something you normally see at all within real estate per se, right? It's usually like within other type of business models. But can you talk a little bit about selling franchises and a little bit about how your franchise model works and why you would bring in the franchise model then? Because if someone else had a business like this, I would think in many situations they had this niche. You would just go, like most other people, turn into a private equity firm, and you're raising money from past investors to build out all these complexes yourself. You know what I mean? All these different facilities. And you've gone a little different of a path where you're going and you're selling franchises. So you're building out the brand. But can you, a little bit of mindset behind how you guys are doing it? So are you raising capital for some of your own deals while also selling franchises, and kind of the thinking behind making that decision?
Yeah, great question. So a few layers to that. First of all, private equity, what's best for the investment is not always what's best for the business, right? They care about one thing, the bottom line. And also it comes down to an IRR, and you are a marching soldier for their returns. So at the very beginning, I was very like, okay, how do I want to approach this? Because the whole reason I chose entrepreneur is to choose my path and freedom. And if I'm with private equity, they're telling me how to dance, and I don't want someone to tell me how to dance. So, I'm going to say it's an easy path because, you got to be branded. You got to get to that network. But at the end of the day, you're going to bed with an elephant. They can roll on you and eat you, right? So strategically, I wanted to be diversified on multiple levels, which gives me higher enterprise value. I'm diversified on the unit economic level because I have multiple tenants, right? So with that being said, I can lose my top 5, 10 paying tenants and I'll still be fine, right? I also want to be diversified in how I grow my business. So I can never have 1 or 3 people dictate how my path is chosen. So we are choosing paths that eliminate larger people telling us what and how to do things, which, you can look at it pros and cons, but I wanted to build a path to solve this problem without being told what to do and just maintaining control of my company. So franchising is one road, and, we're actually pivoting more to like a partnership model, and the partnership model is more actually just a joint venture. It's very like a profit share. So we were doing a lot of franchising. We have franchisees, they're opening up locations. But now we are doing a partnership model where it's a profit share split. It's really simple. It's just the 2 of us, and that's really clean. So to answer your question, it was about control. It was about diversifying. It's about being in control of my destiny.
Yeah. No, that's a great answer. One of the things is you talked about before, it was difficult to capitalize your businesses, to raise money and everything from investors because of such a novel approach. You were a new person to the industry, which makes perfect sense, right? That's why most people, when they're raising money, you go to friends and family to raise money initially. For your real estate deals where you're bringing in investors. But can you talk a little bit about how you initially introduced this unique investment strategy to your investors? Kind of like, did you do one beforehand? Did you have any type of, I don't know, like how did you present it to them? Did you have any type of like, what kind of pitch deck did you do? Did you have one deal that was already done and you showed it to them?
Yeah, man, it's really funny. I mean, when I first started, I knew I needed money. I didn't know how. I never even raised money from investors. So I was a carpenter. I bootstrapped my first house, turned into a duplex by bootstrapping and did it again. But I'm like, okay, this works. But then I wanted to get into commercial real estate and I needed more capital. And I didn't even know like how to do it, right? Now, the only way I knew at that time to raise money was debt. Simple, right? Borrow this much at 12% interest or whatever and use that. That's what I did. So I had equity in my residential portfolio and I would talk to everybody I knew. I think it was at a Halloween party. I was talking to one of the guests and he's like, oh, my neighbor actually likes investing in real estate. Sure enough, talk to him. He's like, okay, I will lend you this money. And to go through the economics of my first property, I bought it for $470. I couldn't afford to do much on that thing. Even though it's storage yards, it's still kind of expensive. I mean, there's big pieces of dirt and site work is not cheap. So, talk to them. Banks didn't care about anything I had to say. Didn't even bother talking to them much, especially in Canada. And then, so talk to this guy. He ended up lending me money in phases. So his milestones, like, look, give me $100,000. I'll build it out, pre-lease, get the income, borrow another $100,000. And that's what I did. So I bought it for $470,000. I put $70,000 down. I borrowed $700,000 from him total. My own money, $200,000. Then it was appraised at $3.6 million. Now it's worth $5 million. Now I own. So what I did is I refinanced. I paid him back his $700,000. I put the rest in my pocket, and now I own it, which is bringing in $40,000 a month. And I have, $4 million of equity. And that was my first deal in commercial real estate.
Oh. How many tenants do you usually have at one of your properties?
How many tenants? It depends on the size, but you're typically anywhere from like 3 to 6 tenants per acre.
3 to 6 per acre. And how many acres? What do your properties range at?
Anywhere from 3 to 10.
Okay. Yeah. That's nice. So you have some scale there between, you know what I mean? Maybe between like a few 10 to maybe 50 or 60 different tenants. So it really spreads that over a lot of different rent checks every month that come in.
Yeah. And that's the beautiful thing, right? It's very diversified. Yeah, it's nice.
So let's talk about, kind of as we're wrapping up here, some common mistakes you see industrial and storage investors make. I know you're in a very niche thing, but I mean, obviously you see a lot of this within construction and what you do now. Yeah,
I would say like I'm finding a lot of syndicators extend themselves very thin, going after a lot of assets and not being able to deliver with their partners and their investors. So, and because the fees they've taken are so low because the investors have pushed back so hard and became so competitive that they just don't have enough meat on the bone to actually fulfill and come through on their word. So I'm seeing that a lot in the industry. So I would say that that's a big thing that I see as a mistake happening, is overextension and coming through on fulfillment.
Yeah, as another thing too, it's with syndications all over. It's every different industry within real estate. I mean, you see that where they don't have enough money to do it. They're not doing deals that are fat enough. They're doing really thin deals, and so they're cutting fees, they're cutting this, and if they're lucky, they're just giving money back to investors, not making anything. And some people that are unlucky might be actually losing some money out of their pocket. So it's it's difficult to, with everything goes into a syndication. It's very difficult to do it if you're not doing good deals, very good deals. You know what I mean?
Yep. Yeah, exactly.
So overall, your years of being in construction, being in sales, being in storage, what are some primary factors that have contributed to your success over that time?
Yeah, I would say like resourcefulness. Like even as a young kid, like getting started in real estate or younger, I just had to be extremely resourceful to overcome obstacles to make things work. And that covers like a wide base of so many, whether it's financing, getting creative with financing, getting creative with deal structure, being creative with leasing up my yards, building out the yards at an affordable rate. There's just so many levels where that impacts us as a company, where I've had to go and build tools or systems or create relationships that help attribute to our success. So it's about being scrappy. And like, I'm not sure if there's a better term, besides like just grinding it out or being scrappy or resourceful. But I would say that that's probably one of the main things that's contributed to my success. Just not being afraid to say no, not being afraid to hear no, and doing what it takes to get the job done.
Yeah. That's some great insight. So as we wrap up here, how can our listeners learn more about you and your business, Longyards?
Yeah, follow us on YouTube. Follow me on Instagram, Chris. I think it's at Chris Longyards. And you can go to my website, longyards.com, fill out a form if you want to learn more, and we're happy to reach out to you.
Chris, thank you so much for coming on today. We'll put all those links into the show notes, and look forward to connecting with you here in the near future.
Thanks, Charles. Appreciate it.
Hi, guys. It's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.